Welcome back, everyone, and I'd like to welcome Nigel Gears, CEO of Southport, and Lara Stevens, CFO of Southport. So thank you guys for joining us today. You were going to give us an update on your interim result. I don't know if all the councillors have seen it. I know that Scott, you went online, watched the presentation. I had the joy of reading through Business Desk and the reporting of it there, so that was good. So look, welcome, and look forward to the presentation.
Thank you. Tēnā koutou. Good afternoon, everyone, and thanks for the invite, Andrew. Much appreciated. There is a fair bit of this information already available either on the NZX or Southport's website, so feel free to get in and have a good look at it. Look, we're not going to go through it intimate detail. We'll cover off the main key messages and the financial results and the trade. And we'll look a wee bit at the business priorities over the last 12 months and going forward in the outlook. So that's probably what we'll cover off. And then we'll just invite any questions from the team here. So obviously, firstly, look, we're very pleased that the company has had a record interim profit. That's across both cargo performance, profitability, and revenue, which is an incredible result. Very, very pleased, and it's obviously on the back of a strong economic performance in the Southland region, as most of us in this room will know. The dairy sectors, even though we had 9 declines in the GDT, it started to come back up again. So the dairy prices are holding up well, and the red meat sector is going extremely well. So Southport, 85% bulk business, and a lot of that is the imports of ingredients for the agricultural sector. So when the agricultural sector is performing well, Southport performs well. The other key part to that discussion also is the aluminium smelter. Like last year, we had a 50 megawatt demand call made by Meridian, which impacted the volumes quite significantly over TY. So they're back to normal operating parameters now, so they're up 30%, so that's pretty important for our business. So being a third of our total throughput. So between the agricultural sector and TY performing well, we've had some pretty good figures, both financially, as I say, and cargo through the port. An important part to the performance also, the councillors may remember when we conducted Project Kia Whakau to deepen our channel. That's had significant impact on our business operationally. We took our draft from 9.7 to 10.7 metres, and that's made a massive difference to the financials for shipping companies coming through the port. They can bring more cargo in per vessel now. We're seeing wood chip vessels doing one port call to New Zealand to Bluff, and then one port call to Japan, rather than going to multiple ports. So that's a lot of cost savings and benefits to the wood chip exporters, meaning they can put more through the port. We're also seeing a lot of the imports of fertiliser and stock food coming in full. So the economics for shipping companies has improved quite majorly, which is amazing. If you look at, we did 154 ship movements during that 6 months. And of that, 25% of the vessels calling took advantage of deeper draft. So that's significant. That's massive for the port and for the industry. We're always looking for opportunities to add further value to our current service offerings through strategic investments, and we made another one recently with the investment in a warehousing facility down in Bluff. So we're looking forward to adding that to our portfolio. And finally, based on today's information, we're basically expecting positive cargo trends to happen, to continue for the next 6 months. And we always say that is tempered by geopolitical tension and considerations, because there is quite a bit going on in the world, and New Zealand's an export community, so we are influenced by what's happening in the world market. But we see at these moments these positive cargo trends continuing. Lara, pass you over to you.
Kia ora koutou, ko Lara Stevens aho, no Awarua aho. So I'm the CFO at the port, have been for a number of years, so I've met many of you around the table. Thanks for the opportunity to come along and have a kōrero about how our 6-month profitability has gone. So just talking about some of the operating performance metrics for the port. As Nigel mentioned, we've had a really strong start to the year, so very positive, and looking forward to seeing what the next 6 months brings for us. So our total cargo volumes are up by almost 18% for that period. We hit almost 2 million tonnes, which again is a record for that half year. If we break that down across the different cargo types, so bulk cargo volumes up almost 10%. As Nigel mentioned, the smelter has now brought their potline back online, and so the TY volumes are up by almost by 30% for that 6 month period compared to the prior interim period. And our container throughput was also very good for that period, so up 20% from last year.
I want to take the opportunity with the excitement, Lara, to one of the councillors already signalled he'd like to ask a question. Are you comfortable with that?
We can do it when they're finished.
Which way would you like it? With how
Whatever suits.
Firstly, congratulations on a good outcome. That's quite exciting. And best wishes, Nigel. This may be your last meeting with us, so we'll pass it on. Given the much better performance that's occurring, when you had your annual meeting, you talked about capital works and maybe tug replacements and stuff. How are you going to split possibly an increased dividend or launching into the capital works, and what can we expect around that?
Good question, Eric. I guess we signalled back at the annual general meeting we had prospects of another $70-odd million worth of CapEx going forward, which is quite significant. And what you're looking at here is some of it's a big chunk of that is growth, and a big chunk of that is business as usual. So there's some significant, when you look at our asset balance and our balance sheet is around about 110 million, Lara. So we're talking about another 70-odd million. So it is very significant. And if you're looking at some of the business as usual decisions we're going to make, we've got a tug that we're looking at, and a new tug now. Typically in the past you're looking around 10 million. It's just about double that now, 17 to 19 million for doing the same business that we're doing currently. Also, crane, we're looking at replacing cranes. We've got some really old cranes, and they're getting to the end of life, and some of them, one of them they're not even making spare parts for. So we're looking at replacing those, and those cranes typically in the past were $5 or $6 million. They're now $15 million plus. So this is significant capital just for business as usual. On top of, we still want to grow the business, so there's more on top of that. So if we want to grow the bulk business through the port, we've got to make infrastructural changes to the onshore, because it's quite interesting. We've developed the channel and deepened the channel, and that's created a lot of efficiencies. So it's been really good for the port and good for the exporters and importers, but we've found that it's been so successful, it's created challenges on land with congestion, and there's been a lot of pinch points with vessels being at the berth for longer periods of time. So there's pinch points on the stevedores, on the trucking companies, and on space on the wharf. So we're having to look at how do we cater better for this amount of bulk cargo going through. We're going to have to tear down sheds, do new paving, put in new marine dolphins, and anytime you start playing with this infrastructure, you're talking, not a couple of million, it's usually tens of millions of dollars. So there's a significant amount of work to do for bulk cargo, and the container business is growing. And it's the Island Harbour is 40 hectares. If you go back 7 or 8 years ago, half of it was available. If you look at it now, it's fully utilised. So we're growing the business. So then we've got to make decisions around how do we move the jigsaw puzzles around to fit everything in, and what do we move off port and what do we keep on port. And a simple example is our administration building. It's on the edge of the container terminal. We need more space. Do we move that? That one decision is $8 or $9 million. So there's significant amount of decisions to be made in the next 5 years. And when you're talking about dividend, I guess it's pretty difficult for us to comment on future dividends, but our desire is to have a consistent dividend going forward, and to look at we've always got to take into account our CapEx when making decisions on the growth and dividend. But the best thing we can say is that we want to have a consistent flow going forward.
Probably just one thing to add in the dividend front, you would have noticed that we've increased the interim dividend by 1 cent per share, and really that's just a reset of the split between the interim and the final dividend, because we've got into this position where over the years we've increased our total dividend, but we've maintained the same level of interim, so it's a bit of a reset. It's not signaling, definitely not a signal that we're going to increase the dividend for the year. That's a board decision, and as Nigel said, we have to take into account future CapEx coming.
Thank you.
Partial sorry for breaking in there, because I'd like to get to the headlines of the results, so we'll go back to that now. So sorry for jumping in there.
So really just touching on the financial performance. If we look at the revenue was up by almost 18%, and that's just really a reflection on the trade volumes being up by 18%. But if you look at our EBITDA, that was up by 23.4%, and then our underlying or normalised profit was up by 36%. So what that's showing is, as an infrastructure business, we have a number of fixed costs through the business. So as our revenue increases and our trade goes up, we can take advantage of those economies of scale and better cost management to deliver a more positive signal on the net profit after tax. Our debt has reduced over this time, which is positive, so we have a strong cash flow, and I've already touched on the interim dividend increase in the period.
Right. So I was just going to cover off some business priorities, what we've covered off in the last 12 months, some of the chunkier stuff, and what we're looking at doing going forward. So over the past 12 months, obviously, we completed a project Kia Whakahu to deepen our channel, which has been greatly successful. To accommodate the expected increase in project cargo, we developed a 2-hectare area at the west end of the island harbour, which basically filled the rest of our island harbour. And we've been handling the project cargo for Kaiwera Downs, the wind farm going through there. And as the councillors will be well aware, there's quite a few others in the consenting phase for Southland and Otago, and most of these projects are going to be delivered through Southland through Love. So that area is going to be well utilised going forward. So that's important that we have that in place. For example, the Contact Energy project that's going through the fast track consent at the moment, their blades are 85 metres long. So they have to be stored on the island harbour. There's nowhere else to put them easily. So if you have 50 turbines, 3 blades, 85 metres, takes up a significant amount of space. So although it's exciting, it is a logistics bit of a puzzle. So we've also developed and approved a sustainability strategy, which will increasingly guide our future business decisions going forward. And we acquired a second pilot vessel for resilience, and as I said earlier, we secured an additional warehousing facility to provide greater flexibility and to support growth in this part of the business. If you look at the dairy industry over the last 3 or 4 months, due to the prices and the amount of product on the market, both Fonterra and Open Country Dairy have been holding on to product, so there's product stored everywhere. So there's been massive pressure on warehousing systems. So the addition of this warehouse is going to assist us with providing more capacity, because if we can't provide that capacity, the product's got to be stored in another region. And if it goes to another region, it can't come to the port. So it adds to our service offering, which is really important. Looking forward, a key part, as I touched on earlier, is we're going to undertake a port planning process to ensure that we're making the best decisions on the infrastructure and what we should have on the island harbour and what we should have on the foreshore. It's always good to bring in a third party, have a fresh look and make sure we're making the right decisions, because as I say, every decision we make involves quite a significant amount of capital. It's really important that we have very good berth flexibility, so we're looking at the amount of berths that we can utilise now going forward for bulk cargo vessels. At the moment, we've got 1 dedicated berth, which is excellent. We've got a secondary berth, which is good, but it needs to improve, and we want to look at a third berth. So if we got all this congestion, we need to turn around vessels very quickly. So we've got to have multiple berths that can operate at full noise. So that's an important project going forward. And as I said earlier, how we develop the island harbour itself to move cargo on the actual land side is important. I'm also pleased to be progressing a formal working relationship with Runaka, which hopefully will formalise soon. And finally, as I said earlier on, we've got to build the capacity to handle more containers on the port. So there's quite a lot of moving pieces at the moment. We're at a growth period. We're about to head up another level, and that's going to involve quite a bit of capital expenditure. So very quickly on the outlook, repeating myself a little bit here, but we expect the volumes to remain resilient, driven by agriculture, supplementary feed practices in the strong red meat sector. The smelter, we expect volumes to remain consistent, subject to there being no demand response calls from Meridian. At the moment, the lake levels are looking positive, so let's hope that they stay that way. We hope the strong operating free cash flows are anticipated through to the end of the financial year. And there are a number of growth opportunities in energy and aquaculture that will require targeted investment. So that's pretty much it, really, guys. We're open to any further questions on the result or some of the activities that are underway.
Can I go to you first, Jeff?
Yes, thanks, Chair. Nigel, given the constraints you appear to have down at the port there, and congratulations for the big increases that you're getting through tonnage there. Is there any scope, or have you looked at the possibility of an inland port to increase your tonnage through there?
Yeah, no, very good question. We have actually got an inland port in town. It's called the Intermodal Freight Centre. So it's located adjacent to the Kiwi Rail yard, and we developed that principally really for containers more than bulk cargo, and that was to facilitate the increase in imported containers coming through the port and providing a facility so you could get them off port onto rail and into town to be land rather than doing it at Bluff. And it provided a competitive transport option as well. But as far as bulk cargo goes, the issue we've really got is it's not so much there is issue with the port, with some of the assets on port, but the majority of the problem we're facing really is capacity for the stevedores, who's a third party operating on the port, and the trucking company. So we can provide an efficient marine operation, we can provide the landside infrastructure, but we rely on other parties to get productivity up to get the volume through the port. So we are having discussions around those things at the moment. And it's a bit of an unexpected consequence of the success of the channel deepening, because the vessels were typically in port for 3 or 4 days. Now some of them in for 7 days. And if you get a bad set of weather, if it's fine particle like bokra fertiliser, or if it's palm kernel and it's windy, you've got to close the hatches, you can't have product blowing around. So, something that went from 3 days is now up to 5 days in bad weather, could be 7 or 8 days. And then you've got vessels sitting out there waiting to get in, and they've got a full load now too. So they're not here for 3 days either. So they're here for 5 or 6 days. And now we've got project cargo coming in, and they can only operate in one berth because of the size of their gear. So they could be in for 5 or 6 or 7 days. So it's great for the port. It's just that it's creating these unexpected consequences that we're working through, and we'll get through it okay. It's just a case of how do we increase the resources for the stevedores, and how do we get better at trucking, communication, and volume through the port.
Right, so this inland port here, you've still got capacity there to increase the holding areas there, have you?
No, we're restricted. We've got an envelope, but at the moment it's meeting our requirements. We Devan imported containerised fertiliser and a few other bits and pieces for around town, but we also pack MDF for Daikin that goes out through the port. So we do a bit of import and export, but it's meeting our requirements at the moment. But this other warehouse that we've purchased in Bluff that we're upgrading, that's going to provide us with a lot more flexibility. So if we want to say some of the stuff we do in town, if we want to create a bit of space for more activity, we can move that down to the Dunedin facility and create additional space in town. So that's going to allow a bit more flexibility. So if we need more demand through town, we can address that.
Morris?
Oh, yes, thank you, Nigel. Two things. One, the sustainability strategy you mentioned before. Can you elaborate on that? What does that mean? What does that involve?
Yeah, definitely. Like, it's a moving target in a lot of respects. We set a sustainability strategy in place during this past year because we wanted to address all the environmental issues around the port. Part of that was also driven by, we've got a discharge agreement obviously with the council, and that's coming to an end where we're going to have a new system in place. So we also had the climate related disclosures that was part of our responsibility, and we wanted to address everything we did on the port and put a climate change action sort of focus on it, especially when we're doing CapEx. Are we doing the right thing? Are we looking at it not only from a financial aspect, but from also an environmental aspect and also from an emissions aspect? Because we've been measuring our scope 1 and 2 emissions for 3 or 4 years at least now, and obviously as cargo increases, they're going to increase, but we want them to decrease as a percentage of the cargo going through the port. So it's important that you have to measure it, and if you don't measure it, you don't know whether you're improving. So the sustainability strategy is really to encompass everything that we do. We've had bits and pieces scattered throughout the business, but not as one policy or procedure. So that's why we put it in place, and it's important that we focus on that with basically everything we do.
Thank you. The other one was the Bluff Invercargill Road, and that seems to be potentially a bit of a weak link. Are you thinking about that, or are you leaving that to the road transport authorities?
Very good question. It's a difficult one to solve, that one. There's only one way in and one way out. Look, we do focus on that, and we have discussions. Obviously, there's a road transport strategy, regional transport strategy that we discuss with Environment Southland, and we've looked at climate change, we've looked at sea level raises, and it is a concern for us. There's no doubt about that. So we don't have any solutions at this point to what that may look like going forward. But there are ongoing discussions. It's a massive issue for the whole region.
I'm not sure whether the port would have a role in providing resources to improve that or not. Would that be appropriate or not, do you think?
No, I don't think so. I think we've got enough challenges of our own with climate change, seismic resilience. I think we've all got our part to play in finding the solution to those issues. We've got to be able to provide the solution for cargo to get in and out of the region, onto the network, and hopefully everyone else plays their bit to ensure the network's up and running.
Thank you. Thanks, Mr. Chairman.
Any other questions? Lyndall?
Just quickly, you mentioned, kia ora. You mentioned your relationship with Awarua.
Yes.
Can you just elaborate on what it's going to look like?
I can't really discuss that at the moment because I haven't seen the final form of the MOU, but it's basically we want to have a closer working relationship with them and discuss more formally our future aspirations, what their aspirations might be and how we can work together and provide a better environment for both parties. Because Bluff's a small community, Lara, and we like to ensure that what we're doing is benefiting the community as much as possible. And a big part of that is the iwi. And also, obviously, we meet with the Bluff Community Board on a semi-regular basis to discuss what's happening as well in the area. So, and we have a relationship with the Runaka, but can always improve.
Probably just to add to that, at the moment we have an informal relationship where we offer quite a lot of support to the Runaka in a number of spaces, but it's more about formalising that and understanding what their expectations are. Thanks.
What is about visibility?
Nigel, you referenced some exciting stuff, living in the bottom of New Zealand versus living at the top of the world with energy and agriculture. You'll be quite excited by those opportunities.
100%. Like you would have we've been called the Saudi Arabia of wind down here. And we talk to that and say that it's not because of the strength of Wellington, but the consistency. And it's really important. And as the councillors would know, the Great South did a study and they had 113 sites that they had identified for wind farms. That won't be them all, but 113. So that's quite exciting. Like it's important for the region to have that security of energy, but also for growth of industry. And when you're talking about data centres and agriculture and all those types, and Tiwai expanding their operation, that's pretty important because we want to see the region grow, and it's good for the port, good for the people, it's good for the country. So in agriculture, the government wants a $3 billion industry. They wanted $1 billion from the Southland region, and we're very we want to be part of that. And that again, they're talking about 20 or 30,000 tonnes, but that's hundreds of millions of dollars of investment. Huge outlay at the beginning of the project, and for us again, that's a massive consideration. How do we play our part? Because the town wharf, where a lot of this activity could take place, we've done some rough high-level figures, and to upgrade that town wharf, you're talking $120 to $130 million, which is significant. So you've got to work through. You got one bite at a time. Look at get the consent through first, and then follow the process, because you'd like to think that if Ngāi gets Hananui across the line and up in operation, you'd like to think there'll be more than one project down there, because it is still great water, cold water, and you think it'll be in demand going forward. And we want to be part of that story, and it'll be fantastic for the region. Huge.
Other questions? If not, I just want to thank you for coming in. Nigel, this might be the last time you get to present to us, but thank you. And I want to acknowledge your really strong interim result as a shareholder, and of course we're excited about that. I want to acknowledge that, Southland is really unique, because when you talk about the growth, and it's all based around agriculture and aluminium, isn't it? So that's why I was interested in that energy strategy, because any opportunities we got to diversify that Southland portfolio will be a good thing for Southland, won't it?
100%. And if you look at look on our history, go back 15, 20 years, Tiwai used to be 60% of our business. Now they're 27% of our business. So we've diversified away, but it'd be great to get more, diversification into the region. The more diversification, the stronger your portfolio is. So.
Yeah. So, look, thank you very much for coming in today. And if there's no other questions, just really do appreciate as you say, coming to spend time with us.
Cool. Thanks for your time.
Thank you very much.
Okay, committee, have we got any other business to conduct today? If not,
Well, we've got events done.
we've got the potential to.
No,
Okay, if not, we'll declare the meeting closed.
thank you. Well done, Chair.
Thanks, everyone. Bye.
Thanks, Cassandra.
Thank you, Scott.
Thanks,